Good day. I'm Martin Gago with Market Radius Research, and it's Thursday, May the 25th. We've got Chief Investment Officer Jordan Ross of Voxtur Analytics joining us. Voxtur is a real estate and mortgage technology and services company. Voxtur has been on with us numerous times and a big fan favorite here. This is Jordan's first time joining us, and he's here to give us an update on the company and the markets and answer questions from me and our audience. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Jordan, thanks a lot for joining us. But before we get into the Q&A for new audience members here, and just to refresh people, why don't you just give us a brief overview on Voxtur, what it does in the real estate market, so we can all get up to speed on the company, and then we'll get into the Q&A.
Yeah, for sure. Thanks for having me, Martin, and hello to everyone that's attending online as well. So just quick level set here. Voxtur, we're a prop tech company. So what that means is we're a technology company that serves the real estate market. More specifically, we predominantly provide solutions and platforms to the US mortgage market. More specifically, again, we value, we insure, and we trade loans. What we pride ourselves on, and we do that by leveraging our data and our software assets. What is really unique about Voxtur relative to some of our peers, because there is no real true competitor, there are bits and pieces here and there, but we pride ourselves on being able to have a solution for every step of the mortgage life cycle. And what that means is from purchase to refi to seconds to trading either seasoned loans or new issued loans, all the way to managing default or for the foreclosure process for our clients. So we have a really, part of the strategy here is that we've got a diversified offering that we are able to serve every step of that mortgage life cycle. And we're doing that with leveraging our tech and data assets, or software and data assets, to make it more efficient, to make it more seamless, and ultimately more affordable to the homeowner.
All right, that's a great overview on Voxtur, and you're exclusively operating in the US market, right? Not in the Canadian or real estate market.
Yeah, we have some business within our property tax group within Canada, but our view generally is 98% of our revenues and employees are all US based. And we view Canada as an option, right? But right now there's so much growth to be had and so much opportunity in the US mortgage market that that's the primary focus and basis of our business.
All right. I guess the notable news coming out of Voxtur over the last several months here is there's been some management shuffle going on, some changes on in the executive suite. Why don't you tell us what's going on there? How about that?
Yeah, absolutely. I mean, it's got to be said, and perception is not always reality. And so I can appreciate from a bystander, the average person, seeing a lot of these changes, be it the CFO or the CEO. But the reality is they are good levers. We have great relationships both with Angela and Jim. We still have an open line of communication. We speak to them commonly, frequently, at least weekly, for a number of reasons. But specifically, I guess the big one is Jim Albertelli, who's our CEO, a visionary, a great guy, a well-known person in the space. But there was a mutual agreement that Jim was going to go back and work for the law firm, which he founded and built, right? And we have a great relationship there. We have a 25-year relationship in the sense that we're still gonna provide our offerings to Jim's law firm to help him grow it, right? So as they grow, we also grow, right? And as we grow, he will be able to grow and provide more services from the law firm aspect to his clients. So there's no bad lever a situation there. And he still, most importantly, has a lot to gain because he's still a major shareholder in the company. So he has every reason and incentive to ensure that we do well together. And so, just by way of background for those who are maybe new to the story, Gary Yeoman, who's now the CEO, he was the previous CEO prior to Jim, right? And so this is not something new to him. He was the previous CEO, and even going back further, right? He's got a lot of experience in the public markets, being the founder of Altus Group, right? A multi-billion-dollar public company, albeit in the commercial real estate tech space, right? A lot of familiarity, being a previous board member and investor in the Real Matters as well, which is not necessarily a direct competitor, but somebody in our space as well. So, this is not Gary's first rodeo. And on the CFO front, Robin Dyson, who's now the CFO, she was the original CFO prior to Angela Little as well, right? So there's a lot of familiarity. There's a lot of continuity there. I just think moving forward, there's a lot of experience within those two specifically in the public capital markets, right? And what it means to be a private company and operate with those types of responsibilities and fiduciary duties, and so there's a lot of confidence there. Things are business as usual, which is great. And onwards and upwards.
All right. And speaking of changes, you've changed your auditor recently. That could raise flags, especially after year end comes about. What's going on there?
Yeah, again, it's one of those situations that, the luxury of being a public company, every single thing that happens has to be disclosed. In this instance, it really was a them issue, not an us issue. I think it's well documented, be it in the Globe and Mail or other press releases by the Canadian Public Accounting Board, where the auditors, being Markham, just weren't. I think got into a little bit of trouble, regulatory trouble. They're predominantly a U.S.-based accounting firm, and had some issues doing their audits within Canada. And so, unbeknownst to us, they've chosen to retreat. There was nothing nefarious about the financials. It completely caught us off guard. There was no specific reason in their resignation letter. And so I think that, it's not just a trust me moment, because we, have since M&P has engaged MNP to be our auditors. So that kind of, the proof is in the pudding there. There was nothing nefarious. There was a lengthy vetting process by M&P. And so we're started off a great relationship with them and working towards getting that year-end audit out ASAP. But, thanks for asking the question, because it is, it's one of those things. Perception really did not look good, but unfortunately it caught us off guard. There was nothing we could do. It was out of our control. And we're doing everything within our power to get those audited and give those types of financials out to the shareholders, which we owe. And, quite frankly, I'm not going to sit here and give any guidance, because it's not appropriate to do so, especially with new auditors coming on board. We're working to get those out to you by the end of June. But we were excited, to be honest. Our communication and our messaging throughout 2022, with the eye of being profitable, right? We were executing on that strategy. And so, unfortunately, we were 2 weeks or 3 weeks away from issuing the audit before we got the resignation letter. But we were excited, right? Because the messaging, we thought we were doing pretty well in executing on the strategy from a financial perspective that we were communicating to the market throughout 2022. So, unfortunately, we're just as frustrated as I'm sure a lot of the folks on the call here, but we're trying to get those out ASAP and believe the deadline. And our CFO Robin might be a little nervous saying so, but the deadline for us would be the end of June.
All right. On to other volatile matters. Let's talk about the banking system in the U.S. with the regional banks and the volatility there. How has that affected you in your operations and maybe the whole real estate market and that in general?
Yeah, there's no direct impact per se. It's kind of speaks to the larger impact being more the macro, the headwinds right? And what we've seen with the cause of these rising rates, and the Fed in the US starting to appreciate the cause of this uncertainty is due to them continuing to rise rates. And, most recently, as of a week or 2 weeks ago, starting to give that pause, right, which will hopefully provide a lot of stability in the marketplace. So, yeah, the regional banks, it's more of a macro issue, and it speaks to the pause in the marketplace. It doesn't have an impact, and we're not pivoting or changing our strategy, but it does have an impact in terms of volumes, and mortgages being originated and or traded, right, which are the two big revenue drivers of our business, right? So it's unfortunately not been a positive thing, but in the same breath, it hasn't altered our strategy per se, right? So the strategy that that Gary and the management team we have, and the vision that we have, is still remains, but there has been obviously just a pause in the marketplace until these other larger banks and smaller banks really adjust to the new normal, right? And so I'd be lying if I said it didn't have an effect, but it didn't have a direct impact on our strategy.
So it's more that your business, there's a slowdown in the real estate market caused by the higher interest rates. And generally, it seems to be those higher interest rates that cause the bank turmoil. So really, it just comes down to the banks are slow. The interest rate rise, the rapid interest rate rise has slowed the market down a little bit here.
Yeah, it's just caused so much uncertainty, right?
Yeah.
And so people are trying to just make sure they're good.
Yeah.
Right. And there was only maybe a couple that got ahead of their skis and put themselves in bad situations, right, that caused this problem. But yeah, it's just, I think the uncertainty is finally settling out with the most recent announcements from the Fed, right? But our strategy is still sound, and we're starting to see volumes pick up again.
So referring to your strategy, we've seen this rise in interest rates. There's a change in management. Is the strategy and execution the same, or have you modified that given the macro environment?
Yeah, I mean, there's two ways to look at it, right? There's the business and the products that you offer, right? And then there's also being public, there's the financial strategy as well, right? So maybe I'll break them up with two. And, Gary taking over now only, about a month ago, restabilizing and putting a heavy emphasis from a product perspective, and really, really trying to grow our data and software assets, right? Because the whole strategy was transitioning to become more of a pure play tech play, right? And so we had some service oriented businesses that we were using to foster, develop, and almost test our theories with our products. But really what Gary's done is we're going to focus specifically on the tech and data assets, the software and data assets, right? And put a heavy emphasis on growing those, right? And making sure the product roadmaps, or those products that are being developed, are the ones that have the quickest path to revenues, as opposed to some of the longer terms, which were still great ideas, but we've shelved those for the moment, or put a pause on development to really put a focus on those revenue generating ones today. Right. And so that's a big thing that Gary's focused on. And I call it the new man with the plan. It's kind of weird to say new, because he was the previous CEO and he was the executive chairman prior to taking over CEO about a month ago. But that's really what he's come in and said. This is his vision or strategy is to really grow the near term revenue generating data and software assets that we've accumulated over the last few years. Now, from a financial perspective too, he's also got a keen eye on, he's tailored back the growth aspect, meaning we're still a growth oriented company, but we're not solely focused on growth, right? He's definitely elevated the emphasis on being EBITDA positive and cash flow positive, right? And the old world of, it was only about a year ago where people were and companies were getting rewarded handsomely, right? And being told, quite frankly, I don't care about profitability. All we care about is growth. Show me the growth and I'll reward growth more so than profitability. And so we got caught up in a bit of that, but I mean, everybody else was. And so, but now I think Gary being back in the place and said, we have to be positive, EBITDA positive, we have to have positive cash flows. And our hopes is to that we would get rewarded for that. And I think that's what our shareholders are looking for. I think that's what the marketplace is demanding in this new world that we're currently living in. And so, to summarize, from a product perspective, the strategy is all about growing our software and data assets that have the most near-term revenue opportunities. And from a financial aspect, it's to make sure we're EBITDA and cash flow positive.
So focus on the businesses where they can generate those cash flows the soonest, foot off the gas a little bit, so to speak. So it's not growth at all costs. It's like get to profitable growth.
Absolutely, right. And that's meant sometimes it's very hard, right? We made certain investments to be, to overweight our growth, be it in marketing campaigns, marketing departments, right? And so we've done some restructurings to meet those objectives. Those aren't easy. These are real people, right? Your people are your strongest assets in most cases, right? And so it's been a difficult time, but it's the necessary decision that we've had to make.
All right. You can't comment on your financials at this point, given the audit and that's late. But one of the key aspects of your balance sheet, call it, is your senior lender, I guess you could call it, Bank of Montreal. What is your relationship? What is the status with the bank?
Yeah, I mean, at the outset, it's very simple. The bank's a great partner. And we have a long-standing history with them. We're very close with them, going back to even the IPO Altus days and the credit facilities that we had with them, the introductions that even we made with them to Real Matters, which has been profitable for them, or fruitful for them as well. And they've continued to grow it. I mean, they've upsized our credit facility 3 different times, right? And we're going back to when we had a market cap of, sub 10 million, right? And so it shows their confidence and their belief in us. But at the same time, and they've been nothing but great partners. They've accounted for, they're adjusting, they appreciate the macro headwinds and the uncertainty that or I shouldn't say uncertainty, the unprecedented growth in rates and the impacts that has. But at the same time, we as a management team appreciate that's a lot of debt, right? The rates yesterday are not the rates today. And that's got a big impact on our balance sheet and our cash flow to service that debt, which we continue to do, paying off the principal and interest, right? And so I think yesterday's environment, and I don't think we're the only ones in that, appreciating that, where there was really cheap money, right? And we grew our business on the heels of that cheap money. But now I think there's a strong focus on how do we get rid of that debt, because the rates are no longer what we had modeled in, right? And so there is a large focus. The bank is putting no pressure on us, right? They're great partners. They're adjusting to the environment, but at the same time, it's not lost on us. I think Gary specifically and the management team, we want to also, we want to make sure they're confident, put them to rest, or keep them at ease. And we're evaluating ways to remove that type of that overhang to some investors' view. But what I can say unequivocally here and now is that there is no risk of the bank coming in. They're working with us. They're great. They've always been great partners, and they continue to be. But we have an emphasis on trying to figure out to solve for that, right, and remove some of that pressure that wasn't there last year, but now is just as a result of the rising rates, right? And so that is one of the financial strategies or things that we're looking to solve for.
All right. Voxtur has been an organic growth, but also growth through acquisition company. It's been a little quieter over the last year. It was about 8-9 months ago or so since you announced the fairly significant acquisition of Blue Water Financial. How is Blue Water Financial going? How are, I guess, the other acquisitions, the integration? That's always buying a company is the easy part, integrating it's the challenging part. How has that all gone, and what does the acquisition outlook look like? Is there what should we be expecting there?
Yeah, like, just to remind people, the acquisitions we believe, from have all played a great part, have been a success in one form or another, right? It's either advanced our roadmap. So I'm going back almost 2 years now, with our ANOW acquisition. Well, to put it in summary, that future-proofed our valuation business. What I mean by that is, the GSEs, the Fannie and the Freddies who set the rule have publicly said and written into rules and have live programs going where they said, we don't need the traditional appraisal anymore. What we do need is technologies that are capturing the data, being a property in data collection tool, right? The forms, what ANOW did was it automated those forms. So it's an automated report writer, for instance. That's not what we call it, but that's essentially what that tool does, right? And so the components that ANOW brought, we future-proofed the valuation business, right? We were, yes, it's only coming to fruition today, but we were getting ahead of the curve on that one, right? No differently than even, when we did the merger with Voxtur and Jim's firm. He had a very disruptive product in the attorney opinion letter. He was chasing and going after an initiative saying that we needed to make home ownership more affordable. Another great thing, right? Now, on AOL specifically, the attorney opinion letter, or the alternative to title, it's lost on a lot of people. Being a public company and shareholders always want results now. But sometimes when you take a step back, that's disrupting a multi-billion-dollar industry. That's not easy. The good news is the Fannies and the Freddies and the government-sponsored entities, they have written in their rules that this is an acceptable thing, that it's an alternative to title is allowed. It is revenue generating today. The problem is it's so disruptive in nature that it's taking a longer time to be adopted, right? But the rules and the infrastructure is in place. It is revenue generating, and so that's all positive, right? Nobody would like this, the acceptance and the uptick of that to go quicker than us. And then coming to the larger acquisition that you had referred to as Blue Water. Blue Water had so many benefits and was done for many reasons. But to remind people, the thesis there is that we had solutions in the primary market, predominantly the purchase, the refi, the seconds, right, and the default market. What Blue Water brought to us was the whole secondary market, those trading of loans, right? And so that was that fully completed, or to an extent, I guess you're never fully complete, but that completed a service offering, made us diversified, separated us from some of our peers, right, that were either only appraisal or appraisal and title, or just title, right, that only played in the primary space. Blue Water put us in the secondary space. And what that really meant, so not only did it diversify the company, it was continued our execution of becoming a more of a pure play technology company with the margins and the profit margins that it brought. But more importantly, what it did, Martin, was it is a marketplace. It connects sellers, originators of loans, with large mortgage aggregators, those buyers of loans, right? And so when it created that marketplace or ecosystem, right, great product on its own. But the vision there and the thesis on that was that for all of those transactions that take place on the Blue Water platform, it also required the Voxtur historical or Voxtur core services. You still need to value a loan. You got to make sure there's no liens on the loan. You got to make sure title's accurate, that there's, the taxes have been paid, right? And so it was a forum to resell, or an opportunity to sell the original Voxtur offerings, right? And it's created such a massive ecosystem. And to give you a sense, what do I really mean by that, right? And so Voxtur Connects has hundreds. I don't know, I don't have the number off the top of my head, but there's hundreds of originators on the Voxtur platform. So they're syncing up and connecting to the Voxtur platform to sell their loans to the large mortgage aggregators. We had roughly 200 MSAs, maybe slightly more, 200 MSAs prior to the Blue Water acquisition. MSAs being master services agreements with our clients. Now, indirectly, with the endorsement of the clients that are paying Blue Water to buy those loans, we now have exposure to hundreds, somewhere 600 plus mortgage originators, right? That we can now continue to push those. Not only do we do the due diligence on the transaction, but now we can have influence into hundreds of mortgage originators. So we indirectly acquired those. We don't have those MSAs, but with the endorsement of those buyers of loans to say, hey, if you use more Voxtur products, we're willing to buy them quicker. And so it was really, really interesting, and we're starting to see it. The integration is going well. It's always ongoing. You're never going to be done. But at the end of the day, it's been really, really exciting. I mean, it's more specifically on Blue Water alone. Blue Water, from the time we've closed to today, has signed a handful of new conduit clients. What is a conduit client? Again, it's the connection. It's where a large mortgage aggregator sets up, we white label, Blue Water white labels the platform and connects it to the originators that it buys loans from. Well, 2 of those 5 conduits, clients of Blue Water that they've signed up between closing and now, as a result of being a much larger, more complete service offering within the Voxtur family, are 2 of the 5 largest mortgage aggregators in the country. One of them alone has the ability to 5x the previous volume that Blue Water was using. That's really, really exciting. Now, I'm talking about the vision, the strategy, maybe not the vision and strategy, but I'm talking about the opportunity, right? I've given a slight insight in terms of what it could mean. And I'm going to say could because we're not giving guidance here, right? The contracts, that what I can confirm is contracts have been signed. The platform's obviously already built. It's been white labeled and customized for those clients, right? But the reality is, they've said sooner. I'm going to say early in Q3 is when we're going to start seeing those volumes start to pick up for 2 reasons. One, the platform's built, contracts are signed, but more importantly, I think the macro is starting to stabilize, to my comments earlier, right? So that's really, really exciting. Has it been as quick as we wanted? Absolutely not. Did we foresee the rates going from, 0.25% to 5.25%, in less than a year? Absolutely not. These are unprecedented times. I wish we did know that that was taking place. The reality is we didn't. But what I can confirm is the strategy, the opportunity is still there, right? And that's really when, I alluded to earlier, when I say we're going to focus on our tech and data, or software and data assets, that's exactly what I'm referring to. That Blue Water Forum platform is giving us exposure to hundreds more originators than we originally had, and it's creating a volume that allows us to sell the Voxtur core services or previous historical offerings into, right? And it's really, really exciting. You don't lose anything that we previously had, but we've now got exposure to that much more, right? And completes or diversifies that service offering to allow us to sell into for every point of the mortgage life cycle, from purchase, refi, to trading, to due diligence, to default.
All right. Okay. There's a question here about your competitors. Who are your biggest competitors? And then I'm mashing together another question about competitors. What about people like Black Knight? Just give us an assessment of the competitive situation out there.
Yeah, I said it earlier. It's a tough question to ask. I know I would like to, it's easy to compare Coke and Pepsi, for instance, but we really are unique in that sense. And we pride ourselves on that we're not showing up at or submitting an RFP against, our Real Matters, because as much as they have similar service offerings in the traditional, say, valuation or title space, and I bring that up because I'm assuming a lot of the audience online here is Canadian, and Real Matters being a Canadian-based company. but that's not who we are. We don't go up and just say, hey, please pick us because we have better appraisals or titles than them. We pride ourselves on saying we're doing things with technology, we're automating it, we're making it more efficient for you. We white label these platforms for you, right, to make them and look and feel like they're your own or homegrown. But also the fact that we differentiate ourselves by being able to service other aspects of their business, right? Because we take a strong belief, and one of the core aspects or cornerstones to the strategy is that our clients want less vendors. They don't want to have multiple vendors for, purchase when they're originating new loans, or another vendor when the loan may be in foreclosure, right? Or where do they go to when they want to buy and accumulate more mortgage servicing rights, right? MSRs. Our real differentiator is that these clients, be it large mortgage aggregators, like a Freedom Mortgage for as an example, right? They're looking for a single vendor so that they don't have to, and they have one interaction touch point for many different offerings, right? And so that's been a cornerstone, trying to be a single point of contact for these large clients, right? And that's why we've had to do certain acquisitions to have that diversified or that breadth of offerings, right? And the differentiator as well, layered on top of that, is saying, hey, we have best in class data. Hey, we have a software platform that will make and look and feel just like it's a homegrown for you, right? To meet your specifications, to meet your unique requirements, to input your special sauce. And so it's kind of a hard question to ask, because where do I go from that, right? Am I talking about appraisals? Am I talking about title? Am I talking about data? Am I talking about trading, right? What I can tell you is there's nobody that has all of the solutions or offerings that we have under one banner.
And clearly you're I guess you're competing well in each of the markets that you are participating in. You've got a competitive service offering.
Yeah, absolutely. I mean, I don't know too many others that can price a portfolio, if we're just talking about the at least the blue water. I don't know. I was just at the Mortgage Bankers Association Secondary and Capital Markets Conference in New York, which is the #1 conference of the year, and I didn't see any other platform that's able to price the loan in real time. As simple as dropping, originator can drop its a portfolio of loans into a bucket. It prices it in real time. We leverage our OCR technology to determine if there are any errors or errors in the document that need correction, right? And then ultimately transfer it to the buyer of those mortgages with a simple click of the button, right? And so I don't know anybody else that has that. I think we're really, really good from that aspect. I think we pride ourselves, to Gary's point though, really focusing on differentiating ourselves with the efficiency by leveraging our data and using the software, the automation, and I hate saying it because it's buzzwords, but the AI and the machine learning technologies that we've inputted or incorporated within our software platforms.
All right. You mentioned the Mortgage Bankers Association conference. There's a question here actually relating to that. The questioner said a contact of theirs went to the conference and said everyone is talking about blue water. And what was, I guess, any comment to that, or what was the mood or any insight from the Mortgage Bankers Association meeting you just got back from?
Well, I can definitely firsthand experience. Thankfully, I wasn't doing the selling, but I was there with the Blue Water team, and I can say from firsthand experience, not one person had any critical feedback about the platform itself. What they were asking, and what the basis of the majority of those meetings was, how can I get more? I want more product. Can you guys get me more product? Product being, in this case, mortgage servicing rights, whole loans. They wanted to use platform. Can you get me more? Right. And that's where, the other aspect of the team is working really, really hard to upload and continue to add more and more sellers, because the clients that are using the platform to acquire these mortgage servicing rights love it. Right. mainly because we price it, we diligence the loans, and then we transfer it in such a seamless, efficient way that it just makes it really, really easy for them to acquire them with confidence, right? And so, I'm glad somebody's heard that. I wish more would. But the meetings, I can say as well, it was like, it felt like speed dating. Like the people weren't concerned or questioning the platform; they were wanting more. How can we do more business? And I'm telling you, it was like, it was a snowball effect of being late because they were just asking more and more and more when you're going around table to table. So it was great buzz. Listen, it was the Super Bowl event of the year for Blue Water. They did a bang up job, and the client endorsement was that much more inspiring and I guess solidifying, and gave us more confidence in doing the acquisition, more confidence than we had anyway back in September, right? Just hearing it firsthand from these large, mortgage aggregators or even the local banks that say it's such a great experience, being able to link up and provide those local smaller originators with liquidity, right? I know this wasn't part of the question, but some of the buzz was they love seeing the Mortgage Collaborative. We put out a press release. That's 250 small regional, maybe even less than regional banks that originate loans, and they need an avenue, an opportunity or a forum for liquidity because they don't have the balance sheets to keep those loans on their books, right? And so Blue Water's has white labeled this platform and giving these 250 smaller banks the opportunity to do more business, right? Because they know they have that liquidity opportunity, right? So super exciting stuff. I commend the Blue Water team, really smart guys as well, right?
All right. This is a bit of a financial question. I know you can't get too much into details, but you've developed quite a diversified platform. And the question here, you've got your assessment business, title, property tax, foreclosure, refinance, and Blue Water. Can you give us some sense of like where the revenues are largely coming from, which is the biggest revenue generator now, or what to expect from those different lines?
Yeah, absolutely. I mean, there's different pieces to the business, right? And they all have their pros or positives. Like in the assessment business, that's a really steady Eddie business, right? Slow, steady growth, great margin, proper software margins, I would say, right? And then we got some more mature businesses in our valuation business, right? Great clients. Obviously impacted by the macro headwinds here, right? Just naturally being more exposed to the primary, the purchase and the refi markets, right? But I think the real opportunity for everyone is, and it speaks to the strategy again, is really leveraging our software and data assets. Those are the A now ones. So the future, the property, the condition and the data collection on properties for valuations, right? The Benutech, which is the acquisition about 1.5 years ago, right? Being able to provide that revenue generating tool to brokers, agents, mortgage servicers, right? To recapture those loans. And then ultimately Blue Water. Listen, there's no two ways to cut it. We did Blue Water because we wanted to do a transformational acquisition, right? It's got the largest opportunity for not only growth, but mainly profitable growth, or more importantly, profitable growth. And that's in a growth state, right? It's still new. So we've got a combination of assets that, again, we're evaluating which ones are the different aspects of each ones, right? Specifically, but there's no the A-Now, the Benutech, and the Blue Water acquisitions are the biggest growth opportunities really in front of them. And that's not to say, the other ones are any less important. That's not what I'm saying. What I'm saying is they're at different stages in their development, right? Those are fairly new technologies, right? With large growth runways. The other ones are very profitable, mature, stable businesses.
All right, just a clarification with like the mortgages and trading and so forth. You don't actually have any mortgages on your balance sheet. You facilitate and connect buyers and sellers together, but you're not actually owning any of those on your balance sheet itself. So that is not a risk of those assets. It's not on you.
No. We have no mortgage assets. No mortgage assets on our balance sheet. It's that volatility theoretically, and I say theoretically because it's that volatility that would drive more businesses, right? As somebody else's garbage is somebody else's treasure, right? And that's what Blue Water does. It's not only new issue loans, right? In the environment we're in, while new purchase is slightly, or I shouldn't say slightly, but is down, right? It's that seasoned loan, right? Those more mature originated loans that people, for one reason, whether it's capital restraints, new investment theses, new management at some of these banks, we facilitate that forum for people to trade those loans. So no, we have no mortgages on our platform.
Part of the strategy with Blue Water is that with a Blue Water client, then you can leverage that hopefully into cross-sell other services. That's part of the plan. Has that gained traction yet, or is that part to be determined or to be executed on?
Yeah, no. That's exactly right. Right. What Blue Water predominantly does is connects those sellers and buyers. Prior to completing that transaction, there's a level of due diligence, predominantly around the valuation and the having good title. For any acquirer, they want to know those two things. Plus, they want to make sure all the taxes are paid up, right? So that's where the original, when I said Voxtur core services or offerings, that's where they sit. They provide that due diligence for those buyers, right? And it's a nice merger. That's the cross-sell, what we're talking about. The larger opportunity that's since been uncovered post-closing was that Blue Water had over hundreds of originators that now we can push the products downstream when those loans are being originated, not just the due diligence aspect, but now we can use and interface with those originators because they're connected on the Blue Water platform, that we can push the products downstream when those loans are being originated, right? And so we went from, almost having, well, I alluded to it earlier, right? 200 something MSAs, master services agreements. Well, now indirectly, we've got hundreds more, just by way of those originators needing to sync up to the Blue Water platform to sell those mortgages or mortgage assets, right? Or portfolios. Like, that's a real opportunity, right? And as people become more familiar with the two, right? Blue Water having good brand equity, there hasn't been a full shift to being Voxtur related, right? That's for the marketing geniuses, which I don't include myself as, but absolutely, that is taking place.
All right. We are 45 minutes into this. We're running tight on time, unfortunately, and we need to wrap things up here, Jordan. So thanks a lot. And I guess just put a bow on it, so to speak. I always like to ask at the end, what sorts of news flow should investors be expecting over the next couple months or couple quarters? You tend not to actually put out a lot. You can't identify a lot of your clients and so forth. Clearly, we're hopefully be getting your financials out shortly. But beyond that, wrap things up and what to look out for here.
Yeah, I'll say one thing quickly. The communication aspect, there's been a lot of noise, and I'll be the first to admit it hasn't been complimentary. It's noise. It's been negative noise. It's not lost on us. We're trying not to get ahead of ourselves, though. There's a lot of things we would love to say at the moment, but we finally believe we've got some stability. I don't foresee Gary or Robin or the auditors going anywhere. So we got the stability from some of this historical noise, which has allowed us and is going to give us confidence to continue to start communicating more often that we would have liked to. Unfortunately, there's just been a lot of noise. So we definitely have a plan in place to continue to get more positive news out there for our shareholders so they can start seeing some of our successes, right? It is hard. You've alluded to, unfortunately, our clients are the big banks. Nobody likes to give up their competitive differentiators by using our products. So it's really hard to name. Nobody wants to name them more than ourselves, right? But we definitely realize and appreciate the lack of news, but definitely are trying to do more going forward. That's number one. Number two, I think the things going forward is the stabilized, the announcement from the Fed to stabilize rates. that's a really positive thing, right? And so we believe there's going to be those macro headwinds, albeit still there. We believe there's a lot of positive coming into the latter half of this year. Are we happy about it? Absolutely not. But we're definitely excited about what the rest of the year has to offer for us, and believe we can start delivering more results, right? And be more transparent, especially with the news releases and with the release of our financials. The last thing I'd say is, I apologize for all the negative noise, but perception is not always reality. There is a genuine excitement within Voxtur and what we have to offer. There's nobody else like us. Nobody has the breadth of our offerings, right? We are, Gary, like as I said before, we're evaluating both from a product perspective, but also from a financial perspective. Everything from, let's focus on the near-term opportunities that are software or data related, because those do have those higher margins, which we, said. So that's a big focus. And alternatively, or on the other side of financially, it's not lost on us, the rates, what they were yesterday versus today. And that's a heavy burden. The good news is BMO and our bank and our credit partner, they really are good partners. But it's not lost on us. We would like to do something about that, right? We're gonna try and do something about that, because it definitely was a different model than what we originally had. So, Martin, I just want to say thanks for having me. Thank you, for everyone dialing in or attending here. We're going to try and continue to give some positive news going forward. We do believe that the strategy hasn't been maintained. There's been a heavy macro headwind here, but we believe that's behind us. And, onwards and upwards. And it really is some exciting times moving forward for Voxtur. And we hope to get back out there like we were not more than, or not less than a year ago, right? And get back to business. So thanks again for having me. Thank you everyone for dialing in. Feel free to reach out anytime, and happy to clarify anything that was murky or misunderstood in today's presentation.
Jordan, thanks a lot. That was great. Thanks for the update, and we'll talk again soon. All the best. Cheers.